Hi everyone, in this video I wanted to highlight one green flag for Disney stock investors in 2023 and beyond, and that green flag is the improving profitability of Disney's streaming segment. Now, in the most recent quarter, operating losses improved sequentially by about 400 million versus the first quarter. During the second quarter, Disney Plus core subscribers grew modestly with over 600,000 net additions. Now, what Disney has implemented over the last several months is significant price increases in the streaming segment. Domestic average revenue per user as a result increased sequentially by 20% from the previous quarter. That's a big increase. Pricing for Disney Plus has increased by several dollars per month from, let's say, around $6 per month to closer to $10 per month in the US. That's a big price increase. At the same time, Disney introduced an ad supported tier at the same price. So Disney increased prices by $3 per month for the ad free tier, and it left the regular prices available, but now you have to accept advertising on that service. So as a result, Disney saw second quarter domestic Disney Plus ads might linger into the third quarter, meaning that it might experience slower subscriber growth, but that will rebound in the fourth quarter as Disney continues to bring on some highly anticipated content to Disney Plus. Now, I want to dig a little deeper into why this is really a green flag for Disney stock, because you might say, well, if they're increasing prices, aren't they going to experience slower subscriber growth? And isn't that really just an offsetting counterweight and it's not going to be good news for Disney stock? That might be true, but to counter that argument, I will say that these price increases followed by several rounds of signals that they're going to continue raising prices, works as a benefit because industry wide competition is now easing. Competition is easing, and that's very good news for investors. Whenever competition is rising, that's bad news for investors. It's an inverse relationship. So by Disney signaling it's going to raise prices and continue raising prices, it's telling the industry, hey, we don't want this fierce competitive battle. And if you look at what Netflix is doing, Netflix has done something similar. They've continued to raise subscription prices, restrict account sharing, reduce content spending, all of which is a signal back to everyone else in the industry saying, hey, we don't want to compete fiercely. Why don't we raise prices, lower content budgets, and so all of us can have higher profits instead of all of us lowering prices, raising content budgets, making it really, really good for customers, but then that is not good news for investors and us as a business. So, this is why I think this is really good news for Disney stock investors because it's signaling a continued decrease in competition, which is good news for investors because now customers will look around and say, okay, Disney is raising prices, Netflix is raising prices, HBO is raising prices, this other company is raising prices, and they're all decreasing their content budget, so we're getting a similar amount of content. So, you know what? We're just going to stick with Disney, we're going to stick with Netflix, we're going to just keep paying for this content because if we go somewhere else, it's the same thing. It's higher prices, less content. So it's overall very good news for investors that industry wide competition is easing. And so management goes on to say the direct consumer operating results in the second quarter outperformed our expectations or our guidance by 200 million. And it's partly due to shifting marketing expenses, but it's also partly due to raising prices, right, and lowering content budgets. When you raise price and lower expense, that gap between price and expense is the profit margin, the bottom line, and that's what's working in Disney's favor, and that's what's going to continue working in Disney's favor over the next several quarters and over the next several years with this change in strategy from starting off by just saying, hey, let's just offer the lowest prices possible and let's just massively spend money on content and bring on all this new content on the platform and let's just attract new subscribers, right? That was the initial strategy in 2019 and 2020 and maybe for a little bit in 2021, but that has now shifted to, hey, let's focus on profits. Let's focus on profits. We've got enough subscribers. We've got more than 100 subscribers, more than 200 million subscriptions across our services. Now it's time to focus on profitability. And that's really good news for Disney stock investors and why I highlighted this video to say it's one green flag for Disney stock investors in 2023 and beyond. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.